Okay, so in this particular video I'm going to show you a simple but yet effective strategy that you can actually use to scalp gold. Okay, so with that being said, let me show you how you can do just that. Okay, so the first thing you want to do whenever you're trading gold is that you want to look at the higher time frame. Okay, so scalping is actually done mostly on the 5-minute and the 15-minute time frame, but what you want to do at this point is that you want to go to the higher time frame, which is either the 1-hour time frame or the 2-hour time frame. Anything above that is actually a bit too excessive, so for this we're going to be using the 1-hour time frame. Okay, so what you're actually looking out for on the higher time frame is to find the direction of the market. So once you've gone to the higher time frame, like the 1-hour time frame, as you could see here, what you want to do is that you want to know the direction of that time frame. So as you could see right here on this one, we actually have an uptrend. So when there's actually an uptrend within the 1H time frame of gold, what you are expected to do is that you have to scale back to the lower time frame and start taking entries for buy. For example, this were to be a downtrend occurring here in the 1H time frame, what you actually be looking for is sells within the 5 or the 15 minutes. But yes, we've actually found out the direction of the trend, but there's something that could easily assist us. So what I would mostly encourage is that you should actually draw in your support and your resistance level from the higher time frame. So if you've been following the channel, you know I love to keep my things very simple and easy to understand. I'm going to show you how you can actually get accurate support and resistance in the market, but in this case it will actually be in a trending market. This tool I'm going to show you right here will actually help you to draw in confirmed support and resistance in a trending market. So what I'm about to show you here is about to make everything easy. Okay, that reminds me, someone actually left a comment saying that you knew more of price action and that's why you're able to trade stuff like that. For those that are actually close to me, or let me say for those that are actually within the mentorship or one-on-one mentorship, they know I'm not a price action trader. I'm actually using tools, I'm actually using indicators to trade the market. Like I explained in the last video, like second to the last video, where I say like trading tools and indicators are just like calculators that you can easily use to know the direction of the market. But anyway, it's still necessary though. So what we have to do at this point here is that we have to actually find the support and resistance in this current trend that is actually happening here. Okay, so let me show you guys a practical example if I were to use my hands and everything to actually figure that out. So I'll just carry this tool right here. This is a trend line tool, and I'll probably be guessing that okay, price is actually reacting to this point, to this point. Okay, I'm not sure, I have to push it a little bit. Okay, to this point. You don't want none of that because you don't actually know the direct areas of liquidity in the market. Let me show you guys the tool. So what you want to do right now is that you want to go to this trend line tool. Again, this is actually available on Tradingview. If you're not using Tradingview, check the description of this video, click in that Tradingview link, and open a Tradingview account. Then what you want to do is that you want to get to this part that says regression trend. You can just hit a right star on it and tap it. So what you have to do is that you have to draw from the beginning of the trend to the last point of the trend, wherever it is. So we're going to use this point here because we are actually seeing active movements from that point here. So we actually draw it from here to this point, and boom, it actually provides us with the support and the resistance in the market. You don't need to do second-hand guessing where you probably be wrong. So basically, once you've already put in the regression trend tool, what you want to do right now is that you don't just want to leave this like this. So what you have to do is that you have to go back to the trend stuff, get in those trend line arrows, just trace everything, try to make sure it's actually accurate. Okay, we got this one, so I'll just put in this one here. So once you've actually fully traced the regression trend, what you want to do at this point is that you want to delete the regression trend. So as you could see here, we've actually found the support and resistance that is in this trend. What you want to do is that you want to scale back to the lower time frame. What you have to do right now is that you have to go to the time frame you want to trade. So let me use, for example, want to trade on the 5 minutes. Let me use 5 minutes on this. So as you could see from the chart right now, I actually have a clear direction of where I want the market to go. So we could actually see that there's a point of resistance. Price, whenever price touches that line, you could see price actually goes down. The same thing actually happens here. See those reactions here. You can see those reactions here. Okay, so this right here actually looks great and all, but we can actually take this to the next level. So for you to actually take this to the next level, we need to understand something. For those that have actually traded gold, you know that gold is actually a volatile pair. You could actually see it consolidating for a few period of time, and just in one moment you see it spiking or shooting up the next moment, the next hour, or the next minute, any of those things. Whenever you're trading gold, whenever you're using a lot size, a forex lot size, like if you're using 0.01 on GBPUSD, it's not actually the same thing when you're actually using 0.01 on gold. They're actually two different things. In order for us to actually know those points where prices actually wants to push in further, we actually have to use the relative strength index, which is the RSI. So right here we actually have the relative strength index. So right here the relative strength index actually have 3 points, which is the 70 mark, the 50 mark, and the 30 mark. So the 70 mark actually represent one thing, which is the overbought session of the market. I actually expect price to come down, right? And the second point here is actually the 30 mark. So the 30 mark actually represents an oversold zone in the market. Now I've already explained to you guys the 70 mark and the 30 mark. So what is the 50 mark? The 50 mark is actually a representation of equilibrium, which price is not in an overbought zone and price is not in an oversold zone. And whenever we see price at the equilibrium, which is 50, we'll actually see more of consolidations in the market. Let me break it like this in a nutshell. Whenever you see price at the 70 mark, we're actually expecting price to go down at that point. Whenever we see price at the 30 mark, we're actually expecting price to go up. So this is just a little nutshell explanation type thing to what the relative strength index is about. Let me show you guys how this actually applies on the chart. So this right here is actually a resistance point in the market, and whenever price actually touches that point, we could see that price actually goes down. So let's take a look at the relative strength index. You can see that price is actually well above the 70 mark, which is trying to tell you price is actually in an overbought zone. That hey, what do we need to do? We actually have to short the market, because we know that there will actually be a sell pressure actually coming in the market. We could actually see that confirmation right on the relative strength index, confirmation here and a confirmation here. So both of these things are actually saying the same thing. Let's put in a case where you actually use your hands and draw those support and resistance, or maybe of course you could actually make a little mistake here and there, but with the tool that I just showed you guys, it will actually help you guys to draw the support or resistance in a trend. So you could see right here is actually this yellow line that is right here on the relative strength index, and this is actually what we call the moving average. It is the 14 moving average. One mistake I actually find people doing a lot with the RSI is that mainly they see the RSI at the 70, you just jump into a trade. Why the moving average is actually there is to actually give you that extra confirmation. So we could see clearly that when price was at the 70, if you check it through, we didn't see any downward movement throughout this section here. Just as a little confirmation, the RSI actually went below the moving average. This is also for those that actually want to be trading with the RSI alone, but hey, it's not advisable. You should use the relative strength index alone. That's why I had to actually add in the 14 moving average right there, so I can actually make everything much more simple for you guys to understand. So not just that, we could actually see this point right here. So let's use this for example again. So right here we could actually see that price is actually in a support zone, so we could actually see that same movement actually occurring here. So we could see that price pretty much passed the 70 mark and even went beyond. So some people, whenever they see the relative strength index already showing them that we're already at the 70 mark, people actually start shorting from there. So pretty much you would actually get stopped out. You have to actually wait for the confirmation of 14 moving average. Just as you could see, we actually had that uptrend. The price actually got below the 14 moving average, which is just like a confirmation to tell us that hey, this oversold zone, this is the right time that is actually going in a downtrend. Okay, so just to make this much more easier and simpler for you to understand, you can easily change it to high candlestick candles which will actually make everything much more easier for you to understand. So if you guys like this video, make sure you give it a like, make sure you hit that thumbs up button, make sure you hit that red subscribe button if you're not yet part of the family. Okay, so if you want to see a live trading video of me trading with the moving average on how I use it to take trades, both my entry and my exits, so make sure you check this video right here. And with that being said, I'll catch you guys in the next video.